We're just going to go ahead and just talk about what needs to be covered, and we'll get a pretty good lesson in today. So this is the Spotify chart. We're going to go take a look at what he's played. Actually, let's go to XLF. That's a really good one that he's played. So people have an understanding of what he was looking at. 1 second. Okay, so yes, so I'm just going to say he was basically looking for XLF. I'm sure you guys heard that. We're looking for open range breakouts. This is the top peak of the open range breakout. This is the bottom peak or support of the open range breakout. He identified that we had price action that moved above this range, which is this little, I'm going to this into a rectangle. Okay, so this is the open range. As soon as the open range has been broken, and they so basically price action moved up. We now have price action that's moved all the way up, and we have an ignition of the 200 EMA, which is this gold line, and the EMA cloud, and the play pretty much went all the way to the top. So if you're taking this play, notice how this chain isn't really that far off, right? It's only like 34.90, 35. So make sure, right, if you're considering if you find anything like this, your texts are just, or what? My text. That's fine. No big deal. I don't really have friends anyway. Okay. Yeah, no, it's okay. Yeah, so we have the open range breakout. Price action moved all the way up. So when you're looking at the chain, just make sure if you're going to take any play like this where it's not really that far up, that we want to take the closest in the money. So if for example you were at this position where it's 34.89, right, and you're like 10 cents away from the next strike price, you can take that 35. That's not that much of a deal. That's okay. And I'm pretty sure the strike that he took was what strike did he end up taking? Let's see, I know you guys can see the screen because it's the browser extension. He took the 34 call. So that's not that bad. That's actually pretty good. The 34 call that was in the money, and then the chain was pretty inexpensive, so anyone could have taken this and went all the way up to the next play. And let's see. I'm just doing a breakdown of what everyone played, so everyone understands like what they're looking at. Now we're gonna go take a look at Spotify. So Spotify puts was the next play that he took. Same thing. Okay, Spotify. Yeah, surprisingly, even though the stock only went down like $1, this chain went up 32%. So he called it right off here. And I'm pretty sure what he was looking at was we saw a top rejection of this point. So let's mark it here. And let's compare this to the 4-hour chart. Let's do the 1 hour actually. 1 hour chart. Okay, so Syra talks about this a lot. Tiffany talks about this a lot. How do we identify areas where price action may have an issue? So we want to see a base, and then we want to see a rally where price action moves up. So this is a base. This is a base. What is a base? A base is categorized where price action is basically like flat and can't move, and then you see a rally or a price action going down. So this is a rally, another base. All right, and then another base. So where it rejected was this area. So these are all zones where price action starts to decline. All right. So we're stuck in a range. This is definitely we're stuck in a range. So if I compare it to the 4 hour, the 1 hour chart, and I were to extend this, now we know for a fact that we have price action that's stuck within this range. So I'm pretty sure this is on Tiffany and Cyrus' watch list. But if we see price action below 279.83, then we're going to try to test the next zone. If we see price action above 285.44, then we're going to try to test higher over here as well too. So if I were to compare, right, that's why you pre-draw your charts probably a day before. Today would be a good day to pre-draw your charts if you want to, take plays on your own. If not, you could also follow the analyst, but try to understand why they did these plays is they're stuck in zone. So this is a zone. It's been hitting pretty flat the whole day, but he played Spotify from this point, and he bought puts all the way down. Even though the price only went down $1, it significantly went up on the premium for his contracts. Let me see what else. So, I mean, this is not really a good example of a play that could be pretty profitable because, to be honest, if this was any other stock, he probably would have not made that much, but he did. It was a 21% gain from this play. Um, let's see. Does anyone have any tickers that you want me to look at, or any plays that you had like issues during the trading week that you didn't quite understand that I could help break down or try to help us all solve together? This is Q&A. Stop that of Neo too soon. Okay, well let's take a look at this. What was the strike price? So Kendall actually took a Neo play. She got stopped out. What was the strike price? And do you know the time that you took it? So everyone, if you're actively looking at this, let's go look at the chart together so we could decipher and learn together. So there was a $40 strike. Okay. You held it for a few days. Oh, it's been pretty flat. Yeah, I can see why. It's been in the 39 to 40 range for quite a while now. Let's see. Okay. Are you able to pull up your order sheets and see just so I could have a better idea of what happened? Because I'm looking at this chart, it looks like it was just a constant uptrend, but if you bought it around this time period and if you had a closer strike price, then that could be a little bit of an issue. Like if you're swinging it for a couple days, I would say probably get expirations at least 2 weeks out. Because if you buy it a week out, every single day that you hold this, even if the price is moving steadily, like 50 cents, it won't be strong enough for you to make an actual profit because the theta is just going to burn through your premiums the longer that you hold every single day. So if you bought around here, or no, my guess is you bought around probably the 21st or the 22nd, and you held it. Contract is fine off IMES, but I would have been good to see it through 41. Yeah, I could see that. It did hit 41 in aftermarket of the 23rd, but again, right, if it expires that day, you still want to make sure you secure some profits there. Um, from what I can tell, though, the play won as soon as it went across the 200 exponential moving average, which is the biggest point. The buy signal came in pre-market during the 19th, and it held all the way through a consolidation phase, and eventually it popped up and buying pressure came in. So that's a good play, but preferably, I hope you didn't buy in any of these days. You kind of want to wait for a breakout to occur first. What chart do you scalp on and what chart do you trade on? 3 minutes strictly. I don't really look at other charts, right? If I'm scalping, I will use a 3 minute chart. But keep in mind, even if you're scalping, right, you can't just always just stick to the 3 minute chart. You kind of want to see the bigger picture because what if you try to attempt to take a scalp and you get hit on a bottom support over here? That's why you'd preferably want to look at the longer time frames to see, is there an area where price action typically rebounds back up or rebounds back down if it hits a certain point? Because if you were to short this, right, you take the sell signal and you get stopped, it's because you're fighting the same range that it's been trying to break for the past couple of days, and even this pre-market range. I use a 3 minute chart because one, it's the best indication for me to have a confident play that I know is going to be quick enough for me to take profit, but at the same time, give me a chance to not get stopped out so early. Because if you compare it to the 1 minute chart, it's too quick. There's so much movements in the 1 minute chart, you don't really get to see the bigger picture. And if you're just patient, right? the 3 minute chart would actually be a lot better for you. Like if you were to take this, right? Okay, yeah, you'll probably get a play like this where it just runs all the way to the top, and then you'll get this sell signal, but you'll also get these little choppy signals in between. That's why we recommend the 3 minute chart. That's the one I prefer to take. And if you just trust your, your other indicators as confluence, because everyone says the more confirmation that you have, the better it's going to be for you. That is what I prefer. And you could switch to the 5 minute chart as well too. If you feel like the 3 minute chart's too head fakey for you, you could always revert to the 5. That's just as fine as well too. Just realize that the closer you are to the 1 minute chart, the chance of a false signal could come in, because market makers unfortunately control this market, right? And they're creating massive amounts of algorithms that is always going to beat the retail trading algorithms that we've created. Of course, Spice Algo is really good. That's how our group has grown. It's through the algorithm. But at the same time, it's not as smart as those 40, those millions of dollars of algorithms that market makers are creating. That's why you have to be smarter, right? You have to really think about, okay, if I take the sell signal, what is the reason why? Do I see any reason or indication that this sell signal has any validity to it, right? This sell signal, yes, it hit a top peak of this area. You can see some tailing action going on over here, right? There's some tailing. That means that it hit this price target, but there's an aggressive sell-off, so you have these two tails at the top side. And then the sell signal comes in, it ignites below this EMA cloud. Let me zoom this in for you guys really quick. Right? It came all the way down. This was a valid sell signal because it did everything that it could for you to make a quick scalp. But this sell signal here, you kind of have to think about it. What is the reason why I'm taking it? Right? I don't see any reason why, because there's a huge support in this area, right? There's no reason. If you were to take this sell signal and go all the way down here, that makes sense. And then if you were to take this buy signal, I kind of want to see first that it has the chance to break this range that it had trouble to break right at market open. So the safe thing to do is, if I were to take this buy signal, I'm going to wait just 2 more candles, because what happens, it finally breaks it, and this gives me a better confirmation for me to enter into the place. Take this buy signal, ride it all the way to the top, right? As soon as that happens, use a trailing stop loss. So if you're new here, I know you're new here, Mohammed, no big deal. Welcome to the family. We like to use trailing stop losses here. And what this will do for you is, let's say, for example, I buy NEO, right? Mohammed, do you trade with options or do you trade with stock? Whatever, it doesn't matter. I just want to know your style of trading so I can give you a better options. All right, cool. So let's assume you take a $40 option strike, right? That expires on Friday. This is already the 22nd, so it expires the next day. You kind of want to see, look, I have the intent of scalping this, right? What is my key factors? The EMA cloud is this green cloud over here. This is letting me know that I have a 9-period day moving average that's on my side. As soon as I see price action break below the EMA cloud, that means I see a candle that prints below, I'm out. But if you use the problem with that methodology, right? The problem with how people take that approach, which most people do, they'll look at this moving average and they'll sell out, is you'll lose a lot of gains if you just wait for the break of the cloud. If you use a trailing stop loss, that's going to actually protect you and actually make you a lot more capital. So an example, so trailing stop loss, have you used that before? It basically works like this. So let's say, for example, I bought that $40 strike price, right? And it expires on 4/23. That's just right. And I purchased that option at exactly, let's say, $100, right? I bought it at option like $100, and I have a trailing stop loss. How they work is if I purchase the option and I put a $10 mark in difference of that trailing stop loss, if the option were to go $110, my stop loss would be $100. If it were to go to $120, my trailing stop loss would be 110, right? And why is that important to you? That's important to you because, one, you don't know when this aggressive sell-off can happen. So if you have a trailing stop loss that moves up every single time the price does, you're protected. So you actually would have gotten stopped out likely at this aggressive orange candle before the huge sell-off that eventually happens. That's why we like to use trailing stop losses. And I wish more people were to use it. I know other retail investors do not like to use trailing stop losses because they just don't know how to use it. So if you have a brokerage, I hope that you're not using Robinhood. I hope no one here is actually using Robinhood anymore. You could put a trailing stop loss at any mark that you'd like, right? It doesn't have to be $10. It could be $3, it could be $2, it could be $1. But the trailing stop loss would protect you in an event that a huge sell off would happen, right? The sell signal comes in and it goes all the way back down. So instead of me, for example, if I bought the buy signal maybe here or here, and I rode it all the way to this orange, I would have made in profit. I don't know how much the premium would be, but it would be 39.30 all the way to 40.13. I would have made some profit there instead of me getting stopped. I mean, if I got stopped out here, cool, right? I did my plan. But if I got sold out here at this sell off of this sell signal, I missed out on an extra 35 cents in potential premium gain, right? That is the reason why we like to use trailing stop losses. And this is a good way for you to plan. And especially if you're following our analysts, right, you still want to be able to protect yourself. So using trailing stop losses are very important. Yes, our analysts are very, very talented. But again, you're the one trading, not, I mean, you're the one trading, not them. We can only give you guys so much advice, which is why we like to have these lessons every Sunday. So we could teach you guys proper, methodology. Do you like Mark versus? Yeah, I do. I actually like Mark a lot because it's predictable compared to if I were to use like a percentage. Because if you use percentage, what happens if a theta decay comes in, right? Like if gamma or not gamma, if implied volatility were to come in and sellers just start to sell in flocks and you end up losing a lot of money, right? The percentage could be a disadvantage for you. If you use a mark, it's actually going to be safer, in theory, because if I were to do percentage and it were just to die down 10%, right? That 10% could be a huge difference depending on the contract, right? So percentages can vary. I just prefer marks because it's something you can calculate. And what I can say about this, the aggressive stocks like Baba, Tesla, is another huge one. Neo would be considered in that category. Um, SPY. These are all stocks that have huge gamma movements, or sorry, premium. Yeah, BA is a big one too. These are just examples of stocks that are very aggressive in nature when they trade. So you want to play wider trailing stop losses, and it's going to protect you, especially if you're following the algorithm, right? The algorithm's not going to sell for you. It's going to be you. So ultimately, you have to be able to prepare yourself if you're going to take any of these signals. And that's our recommendation. And Mohammed, I know, again, you are new here, right? And it's good that you're asking questions, but that's how we roll, right? Our group is very calculated. What brokerage would you recommend? I'm unfortunate. No, it's okay, man. Hey, it's good that you're here. I'm gonna say these are the ones that I recommend. It's gonna be Thinkorswim by TD Ameritrade. Webull is a great one as well too, though I don't think it's better than Thinkorswim. And then we also have Fidelity, Active Trader Pro Fidelity. Sorry about that. Active Trader Pro, and that's with Fidelity. And then we also have Interactive Brokers, IKBR. So those are the four that I would recommend, right? And it's going to be up to you, whatever you prefer. I will say, though, the breakdown of our group is I think a huge amount of us is on Thinkorswim, TD Ameritrade, because it's just so easy to use and the mobile platform isn't that bad. But if you're so used to Robinhood and you kind of want like a better looking user interface and you want something that's going to be easy for you, then I would say Webull, but just understand that if you're going to be scalping options, you want to give yourself the best advantages possible. And that means better fill rates. Fill rates meaning if I were to buy an option and I want to be filled in right away, like I want my order to fulfill, then the advantages would be IKBR, Interactive Brokers, Active Trader Pro with Fidelity, or Thinkorswim. Webull is still considered like a very newbie platform, but it's not as newbie as Robinhood. And the biggest differences too is Webull does not charge if you were to take an option, like 65 cents compared to Thinkorswim, Active Trader Pro Fidelity, and Interactive Brokers. Like they're going to charge you fees, but Webull does not. So what I would say, look, it's 65 cents. If it gives you a better chance to succeed in this market, then take it, right? That's how I would approach it. 65 cents could be nothing if it gives you a really good price on an option, right? So definitely I would I would say don't worry about the 65 cents. Get something that you're going to be comfortable with. And I would say most our group is using Thinkorswim. So if you have questions, that would be preferable. Like if you're learning, that's what I would say. Though we do have some people who use Weeble though. I'm not saying it's bad. It's just that I just have been in the game for so long. I'll use that movie. Yeah, yeah, perfect. I just be careful with the with the Robinhood. Is it safe to assume you're using limit orders? Yes, yes, yes. I do not use market unless like okay, so this is a big one too because I've noticed some of you guys are buying a little high when we put contracts out, right? Um, and that's going to depend, right? And if you're going to use trade the open, it's all based off of characteristic. I'm sure you guys all know how I trade, right? I'm in a very aggressive scalper. Tiffany is very much like an intraday trader. She likes to look at the longer term trends during the day. I'm not that way. I like to get you guys in and out, and if we lose, that's okay, right? Overall, my win percentage is a lot higher than most people. My win percentage right now is about 82%. I'll lose some, I'll win some, and when I do win, it can be pretty large, and you're gonna know that. So if you're taking a trade from me, for example, you'll already have that mindset. Oh, he's gonna be scalping. That's just how I trade. Um, so if I'm trading, you kind of want to use limits because pricing is everything, entry is everything. So always use limits unless something happens, like a news catalyst comes up. Like, for example, Tiffany called out Baidu 2 weeks ago because they had another contract that they just signed up. And we were chasing that thing because that thing was going up like $20, $30 every minute. So we started to chase it. So know the difference of using market. Like if you're going to use market, just be sure that you know that the price is going to go crazy. Like it's going to launch up like crazy. Like Intel is a good example when they won that contract. I mean, when they found out they're going to release another set of chips for the third quarter of this year, the price action went all the way up. Or, for example, Baba, when they found out that they're going to get sued from the Chinese consulate, the price went down. That's the event that I would use a market order because it fills me right away. But if you're trying to stay calculated and trade the open, because we all know this, right? Kendall, you've been with us for so long now, over a month. You'll know, like how we trade. It's very aggressive how that opening market is, and you just got to be very calculated and quick. So when we say a strike, you just got to be very particular. So Mohammed, we trade every morning. I don't know if you joined us on Friday morning, but we trade every morning for the first hour. Sometimes it might last longer in case we see some good opportunities. We might trade throughout the rest of the day through voice, but typically we'll trade the first hour and trade the open, which is the voice channel. Actually, two voice channels above this one. It says trade the open. We trade every morning. You're free to join us. Who else is in here? We got Lisa. We got Colonel here. Ramirez. Walker. Okay, we got a good amount of people here. It was dead earlier. I'm glad you guys are in. Any questions related to the pace of how we trade in the morning, market orders, limit orders, absolutely anything, because when Tiffany and Syra have their lessons, it's typically a little more advanced. I like to be the one in the middle to give you guys that transition of, good etiquette when you're trading so you guys can prepare. Does anyone have any questions? Q&A. Don't be shy. You guys could also unmute as well too. You guys are all unmuted, I believe. Yeah, you guys are all unmuted. I wanted to make sure I was talking. I was like, am I talking? Stair steps in the TSL field? Yes. Yes. Let me see. Oopsie. Oh my goodness. I will see if I can show it on here really quick. 1 second. Oh my God. Yeah, don't worry about this. I was doing a lot of work recently. I apologize. I know I'm on the web browser, so you're going to see all my stuff. I'm going to pull up the my paper account. Okay, let's see. Was that even my password? I think so. Trading. Okay, so we're going to go ahead and show you the Thinkorswim and how to actually go through the order. Wow, it did not save any of my widgets. Okay, we're going to go to the charts. Let's see. I actually don't trade with TOS applications, so bear with me here if I'm trying to figure out how to even do this. I do everything through my phone. More complicated than I thought. I don't trade with this. What I will do instead is I will go ahead and show you my phone. I'm going to go live on my phone. That might be easier for us. How many of you trade with your phone, by the way? Yeah, I'm going to go live on my phone right now for you guys, just so I can show you. I'd love to show you guys this. So I'm gonna go ahead and go off for just a second so I could show you guys my Thinkorswim on my phone because that's how I trade. I don't like the mobile. I don't like the application from there. So let me go live really quick. So here, let's see. Okay, my broadcast. Okay, so I should be live now. Can you guys hear us fine? Pretty sure you guys can. Perfect. Okay, I'm gonna share my screen here. Okay, so when trading on TOS, there's basic applications on here, right? I mean, there's basic buttons. There's going to be the watch list, the positions, the orders, alerts, and your trigger messages right over here. So when we're trading and I'm actively listening to you guys, let's say, for example, Tiffany says, Brian, go look at Baidu. We're about to take Baidu. You have to pull up your positions, right? Your watch list, and you're going to go to quick quote. Everyone can see this, I hope. Just to confirm, anyone can. Okay, cool, perfect. So we're going to go to Baidu, BIDU, and I'm going to go here. So I should already have my choices of strike prices, everything on here. And if she says, oh, Brian, I'm going to take a look at the 220 calls. So the calls are going to be on the left side, puts are going to be on the right side, and we're going to have the option chain. So this is the option chain, and the gold line is the divider. And let's say, for example, we want to do the 220 calls, right? Let's assume I'm in the position already, and I set a trailing stop. So I'm going to go to the little platform right here where I'm switching. I can go left to right on the arrow keys, and I'm going to go to trailing stop. So this is assuming I already have the position because you can't set a trailing stop unless you already own the position. So, and then this is where I would set that mark. You could set the mark as high or as low as you'd like. So if I'm, let's say, for example, I'm going to do this. I review it, paper trade, order sent, right? And if it says working, it's not there. That means it's not actually fulfilled. It won't show filled until it goes to the filled side. And then you'll see that it's there. And once it hits the filled side, you click your positions on the bottom left. Your position should already show in there. So if the chain were to go up, right now it's $547. So if the chain were to go up $10, right, your stop loss will move up $10. And then if it goes down $10, then you'll get stopped at that point. But if it goes up 30 whole dollars, then you're gonna, it's gonna move up with it. So your stop loss will go up. So I wish I could draw on this. Okay, let's say I put a stop loss at $10 and Baidu goes up to $567. My stop loss is now going to be $557. That's how it works. And I'm going to show you again how to do this TSL, this trailing stop loss. Let's assume you already bought the position.
I go to the quick quote. I go to XLF. That's the stock I want to look at, right? Wait for the chain to load up. And then I pick the position, or for example, let's say I already own the position, right? I go here. Oh, I can't edit this because the market's not open. Whatever. So $35. Click the arrows on the top right and go to trailing stop right there. And then I know Kendall talked about, can you do percentage as well too? You could do percentage as well, but I like to do the mark. You could actually do it like that. You could set the TSL as high or low that you'd like, or you could pre-type it if you want to make it quicker. You can do it that way as well to review, paper trade out, done, order sent, working, and then it won't, if it's in the working side, it's not done. I just want everyone to know this. If it's in the working side and it's taking forever, right, then you have to go in there and you have to cancel and replace, or you have to edit it, right? So how to do that? I go to orders, right? Order button right here. I go to working. I click on the position. You can cancel the whole order, or you could cancel replace. It doesn't matter. Just keep in mind that if you do cancel it and it doesn't, you might have to go into the watch list again and redo the whole thing. You could just cancel and replace it and set your mark as high or low as you'd like. And if you wanted to change the trailing stop back to a stop loss, then you go back to your order section, right? You're working, right? Oh, I'm getting confused. I want everyone to know this as well too. Um, Yes, correct. The median between the bid and the ask. Yes, that is correct. So I want everyone to know this. If it's in the working, that means it's activated. And then if it stops you out, that's when it goes to filled. So just so everyone knows, if it's working, that means it's still active. But once you get stopped out, then it will go to filled. That's how it works. And then if it gets canceled, right, it will show in the canceled. Like if you cancel the order, it will show in the canceled section. But you could just go here, cancel, replace. But if, for example, you figure out, oh my god, this is way too aggressive for me, but the TA is so nice, right? Like the trend analysis is so nice, you can go back into the order, you could cancel, replace, and you could go back to a regular stop loss. You could do that as well too, right? You can go off the bid, you can go off the bid, the mark. It's really up to you, and you could edit the mid or the stop loss at any price point that you'd like. And over time, you're gonna get used to this. Like muscle memory is going to kick in, but you want to be like you want to practice. Like that's why I would say keep practicing over and over and over again because you're gonna get better at it, and you're just gonna get used to this. Get used to this movement, how to get through these buttons so quickly. But the main point is you have to go to watch list. Sorry, you have to go to watch list. Oh goodness, right there. You have to go to watch list and you have to go to quick quote. You have to type down the ticker that you're interested in, right? Or you could create an actual watch list and actually add things on. Uh, this watch list, I didn't make this. This is just the S&P 500, but you can realistically go to anyone and it will show you your recently viewed tickers as well too. So instead of having to retype, just look at the recently viewed and you could see it. And you could, let's say for example, I go to SPY and I already have the position, right? And I want to, let's say for example, I want to buy puts, right? Just go to the put side. Anything in blue, right? That's blue highlighted, that is in the money, and anything in black is going to be out the money. Just keep that in mind because it's puts and calls. It's playing the opposite side. So if I'm making a call out, for example, right? Blake sometimes might not say the strike, but it can be assumed that he's looking for at the money. What is at the money? At the money is going to be the closest strike to the in the money, or it's going to be directly that in the money strike, which is at 417, right? Either 416 or 417. You could take either or. Like, for example, we didn't say a strike price. It can be assumed that we are looking for those two. So on the call side, it's going to be the 416 or the 417. Put side, same thing, 416 or 417. That is what we typically like to do. If we're scalping in the morning, especially in Trade the Open, we're looking to take the closest in the money or at the money. And if, for example, oh, sorry about that. If we're looking to trade weeklies, please, 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 just so you guys know, we're not taking, um, any strikes that expire week of on a Thursday or Friday. So if it's a Friday, we're not going to take the April 26th. We're going to take the April 28th or above. That's going to be assumed no matter what. Leo, I'm glad you're here. Now I can finally talk to you about your TOS. I mean your spy that you wanted me to look at. Um, you still want to talk about that, Leo? I'm pretty sure you do, right? You're unmuted by the way, Leo. What was that? Leo had a question to me earlier, but I'm glad he's in here now. I could just kill two birds with one stone. But does anyone have any questions before I move on to spy about the basic functionality of Thinkorswim Mobile? I know that was pretty quick, but it does give you a good idea of what we look for. It's just the watch list. You enter in the strike price, and then you go into the option chain or the chart or whatever you want to do, and then you just set that trailing stop loss. But you have to already own the order as well, too, though. By the way, so cool. Everyone's cool about that.
I have a question about the trail and stop loss. So if it's like a $5 stop, you there?
Uh-huh.
Oh, okay. I thought I hung up. If so, you just set it for 0.10 is a 10-cent stop loss, right? So
Uh-huh.
once it gets 10 cents up, you would put a stop loss on for 10 cents.
Typically, I mean, I preferably want to, close profit, so I would do like a weird number, like 5 or 6, because I rather secure the profit than get stopped at a break even. Because at that point,
Oh, so
um,
it would have to be up 20 cents, and then
yeah, like that.
you
Like
put
if it's $20, then yeah, go ahead. You could you could edit the order to
right
do
10 cents up
$10 trails.
$10. Yeah.
Yeah. Just keep in mind though, like if you do $20 trails, you better expect that the stock goes up $20 and then another $20. Like the point of a trailing stop is to give you a blanket as the stock goes up, like a staircase. Because as soon as the sell off happens, then it's gonna happen, and you're kind of like left there, and you kind of lose your gains. That's why trailing stop losses are like nice, because if anything happens beforehand, it should already stop you out in that marginal profit difference compared to if you were to hold it all the way to the top and try to sell off. That's the last thing you want to do.
Yeah. Right.
Yeah. Let me go ahead and switch to my computer so I can pull up that spy chart for you, Leo, really quick.
You hear me? You pulling that up now? Did I get dropped?
Cool. I did switch back. Can anyone see my chart? I hope this works this time.
I see your chart.
Perfect. Okay, we are all set. I am now back on my actual browser. No, I'm not on the browser anymore. Thank goodness. So let me close this out. Okay, let's go to Spy. So, Leo, can you tell me the time that you bought the strike and when exactly or what strike you took?
I took the 414 for this
Or
week
14s.
at the very top.
Uh-huh, and then which like right here?
I can't see where you are. At the very
This is
top.
the April you took April 23rd, right?
No, I took the 30th. This week's Fridays.
Okay, but you played this is on Friday, correct?
Yes, I did.
Okay, and then
I'm seeing Neo up. I don't see your spy up.
can it really? This says
Yeah,
Spy.
I see Neo a Neo screenshot up.
Okay.
Does anyone else see it?
Does it show Neo or does it show Spy? What the fuck?
It shows Neo.
I hate the internet sometimes.
I mean, that's what I'm seeing. Is anyone else seeing it?
Okay, this should work now. God, I hate going to the browser extension. It's the worst thing ever. Now it should load. Everyone see this? Show Spy?
Yes, I do now.
Okay, perfect. So what time did you buy the option?
I bought it on the 1 minute chart at the very peak.
Like right here? Like
Yeah.
when you're
I was
close?
thinking it was going to go higher. I think I might have bought it one candle before.
Okay, let's see. Yeah.
But I mean,
Let
I
me
do think
really
it's
quick.
with earnings this week, it's going to go up higher. When with Tesla and Microsoft.
Okay, so let's see if anything matches up with the hourly. Yeah. Yeah, you bought into a zone. So this top retracement here, this on April 16th before the market closed,
Mm-hmm.
it sold off just as hard.
Yeah.
The same time. So you just bought at an hour peak of a yeah, you just bought into a zone. So you bought into a sell-off area. There's a lot of supply. So this is what I meant, everyone. Like if you're scalping, Mohammed, you talked about this. Like, what's the best thing to scalp for? What time frame? This is what I mean. Like, this is a perfect example. Is that's why we like to pre-draw when stuff like this happens because anyone could easily draw these areas where price action has a problem breaking or hitting. So this is a zone right here. Right here is well two. Like these are zones that SPY has trouble every single time. So this is a zone.
How do you see that's a zone?
Rally bases. So let me show you. Let me draw this really quick.
And I do agree. I think that like last time it sold off on April 16th, and I should have realized that again.
No, it's all good. I mean, that's why you're learning, right? So let's see right over here. Okay, so rally. I mean base, rally, right? Base, rally, and then this is the rally all the way back down. Base, rally, base, and then rally, base,
Are you on
all the way
the 1 hour?
down. Rally. This is the 1 hour. Yeah.
Okay.
Rally, I mean base and then rally all the way back to the top. But this is an area. If I go to the 3 minute chart, you'll see it now clearer. This is the zone. So notice how buy signal here broke and it ignited and then it had an issue. Because if I'm looking at this, I'm 100% correct on this. Because look what happened. See how it had trouble breaking because it's hitting that zone now. Eventually, it went into the zone and it rallied all the way to the top. So you could identify these kinds of things if you just pre-chart your charts, right? And then you could also squeeze it back if you feel like you went a little too far, right? But this is an area where SPY has trouble breaking, and it did for quite a while during this phase. And you could predetermine and pre-draw these charts before you even trade. Because what happened, you bought at the top of the zone, right where I draw that zone on the hourly, and then it rejected because it couldn't break the top of that zone. It was in the zone. You want to trade when you see breakouts outside of the zones, like right over here. Right, this is a zone to zone breakout. And the sell signal came in as soon as it hit the out of the zone. Same thing here. Buy signal came in, broke zone, entered into a new zone. See another breakout. Boom. So you could this would be a good example of why you want to use a trailing stop, because if you took this buy signal here, right, it qualifies because you have that open range breakout that came through. Buy signal came in, you held this all the way to the top, you use a trailing stop loss all the way to the top. Where I could see potentially would get stopped out, you probably wouldn't have gone stopped out anywhere here. It would have gone stopped out like here. Because this is a steady move for SPY that rest of the day. You probably would have gone stopped out here. And if you're going to ask me, Brian, how do I know to re-enter then? Right? How do I know to re-enter into the play? You can re-enter into the play as soon as you see a break of the top resistance, which is right here. Right? You can see a break
Bull flag there.
right over here.
Yeah.
No, not anymore because of this.
Okay.
Let me clear this, actually. Let me clear this. Let me clear this. So this right here, yes, if you're looking at the early stages of this would have been a bull flag because it established higher lows, right? This is the bull flag establishing right here, but then you have the hit all the way back down. So right over here, notice how it formed a flag and then went all the way down and it tested the bottom bands of Spice Cloud and it bent all the way back up. So if you're going to take any sell signal or anything after a strong uptrend, anyone, you want to see the appropriate conditions first. Like, okay, you have the sell signal come in, look for the next candle as confirmation. If you don't see anything that's going to let you know, hey, it's going to continue to go down, do not take it, because what happens here, it couldn't break this lower end of this support here, and it got stuck. Because around this area, it looks like buyers decided to buy up and establish a new support in this area. Right now we have a new bullish consolidation. So instead of looking at this as a flag, now I'm looking at this as a bullish consolidation. This is what it's called. This is an actual pattern. It's called a bullish consolidation. You can research this as well too on our trading education side. This is a bullish consolidation right here, because we have an area now, we have a new established range that's not going any lower, not going any higher. And then you play the breakout. You only can play the breakout in a situation like this. And what I mean by breakout, right? You want to, of course, look at the other conditions. You have a zone right here. If I don't see any indication that I'm fighting in the zone, I'm not taking the buy signal. If I'm like here and I'm in the zone, I better use a trailing stop loss, right? And I better expect this to be a lotto because I'm fighting directly into a zone. Yes, it did eventually go up, right? But if you're buying right here on the next on an exit of a zone, that's very risky because now you have to consider the longer term time frame on the 4-hour chart. And you have to try to figure out what's going on, because keep in mind, you're now facing all-time high action for SPY. You're facing an all-time high in this direction. So you're facing all-time high, and there's no reason, that I can think of that SPY should even be up in this level just yet, unless we have maybe 50% of the U.S. population vaccinated, which we're not. We're currently at 38. 32%, I think. If you better come in with the expectation that you're trying to scalp this, and you better treat it as like a little lotto. But I would only play the breakout of a bullish consolidation, right? Not here, because now it's a little too late. I would only play the bullish consolidation play, which is the breakout, because what happens is it hits out, and then it retests back into the consolidation side, but then buyers took control and went all the way in. From this point on, trailing stop loss has to be set, right? Because now it's riding all the way up, and then eventually you'll get stopped out. You'll probably get stopped out in this red candle. That's how I would approach it. It's just that when you take plays, just really figure out the reason why you're taking the play. And I'll tell you a play that I messed up on. What was it? Facebook, I think. I think it was Facebook. No? Was it? I don't even remember. I think it was Facebook. Okay, what happened with this one? What time did I take this one? Okay. Yeah. So I took Facebook Friday morning. Oh, no. I didn't even trade on Friday. Never mind. This was Thursday. I'm sorry about that. This was Thursday. Why did my zone disappear, though? Okay, there was a zone here, everyone. I swear I'm not tripping around. There was a zone here. Yeah. Okay. So this was a 1 hour zone that I did not even know or see because my negligence of not pre-planning was not there. Obviously, I didn't pre-plan and I should have, and that's where you learn to become a trader with humility. What I saw in this play, was I identified an open range breakout, right? I'm going through my motions, I'm drawing the high lows of the pre-market time period for Facebook. And unfortunately I bought, I believe here. What time did I bought this? I bought at 650. So the problem with this play, it would have worked out. It did for a second, but like it only went up $5. So the problem with this is I was fighting a direct zone. I took the trade because I bought so high up on the upwick of the candle, and what happened was the play was I think $150. No, $250, and I tried to see if I could identify a bull flag. Yeah, it did. It did actually develop into a bull flag, like right here. This is what I was looking at that time. I was looking in to see if there was going to be a possible bull flag here. Um, that was not the case. The supply zone that I hit on the 1 hour chart was way too strong. Sellers decided to just sell off the whole stock individually all the way to the bottom. I ended up getting us out of the play on this candle here. Yeah, I sold us out on this candle for I think like a $35 loss per contract. And that was my fault. I didn't identify the 1 hour chart and I didn't see that range that it was hitting. Um, and this is where you have to come in and really you have to pre-prepare. And even if you're coming into the notion that you want to scalp, you have to really look at the bigger picture no matter what, because anything can happen in this market and you have to really prepare for that. And sometimes I will miss it, like this case where I told everyone to buy here and it was up $5, right? But it wasn't enough for me to warrant to let everyone know to put a trailing stop loss. Because if I were to do that and we get stopped out at break even, then it was just a waste of a play. But that probably was the right thing to do because it was already up on the EMA cloud and we were facing a zone, but eventually it sold off hard. And eventually we took the loss on it. And that just happens, right? That's how the market works. Sometimes you'll win some, you'll lose some. It's how you go about learning it. I charted this yesterday because I was really curious of how I lost this play, and I literally bought into a 1 hour zone. My fault. Again, you want to buy on the outskirts of the zone, not in the zone. You can play the zone, but you have to play really smart with the stop loss in mind, because when you're fighting a zone, you are fighting an area of demand or supply. Demand meaning an area where, like for example, you're trying to play short and you bought into a demand zone and the price goes all the way up because there's a demand for it, you lost a play. Same thing on the supply zone. There's a lot of people here who think Facebook is way too overvalued at this price, so they sell it all the way down, right? Supply demand, that's how the market moves. So when you're trading open range breakouts, you still have to consider the longer term zones here. Because I played this like an idiot thinking that I have a true open range breakout. It did, right? It went up, but it wasn't enough for me to get us in and out with a good amount of change. It was only $5. And that's where greed came in. I could have just told us to put a trailing stop. We could have gone stopped out at break even instead of taking a $40 loss in the contract. My fault, right? That's why you learn, you try to get better. But does that make sense to everyone? Why, proper etiquette, trailing stop losses, identifying zones, 1 hour, 4 hour, and using your other indicators to give you better decision making? Perfect. Okay. Yes. What I'm trying to have everyone think about, right? Every weekend, have a plan, right? Of course, our analysts are so great; they're going to come out with watch lists for you guys, but you still want to prepare, right? You want to figure out why they think the way they do, and that's why you're in this group. You're here to learn. You're here to make some money. We're here to grow as a community together. We're here to learn. I said that already, but we're here to, you know, become better traders, and this is a skill you can learn and take for the rest of your life, right? So just make sure you prepare. Um, I I wish there were more people here, but I'm sure most of you know this. I will be gone um, from April 27th all the way to May 2nd. I'm going to be in Hawaii, so I won't be here. So Blake will be the one in charge of the group while I'm gone. So take every lesson like we give and really take notes and really be clear of what we say is because it's very true. I've been trading the market since 2017 and I've been profitable ever since after 2018. But I still don't think that anyone here can just be like a winner every single moment, every single day. It's going to take a lot of hard work and a commitment to even learn the price action to this level because it took me a long time to learn this, right? And anyone can do this, but you really have to want it and you really need to figure out what is going to be best for you. I created Spice Algo to give people a better understanding on price action because a lot of people they're going to look at these charts and they're going to add all these indicators, right? And they're going to be like, "Oh my god, like this is way too much for me. Like I don't know what's going on. How can I even prepare to even look at this?" So that's why I made this algorithm to give you guys a better sense of direction and you could use it in a way for you to make your own strategies out of it, and of course, you're not going to take every signal, but it's going to give you an indication of what the algorithm is trying to give you, right? So the more indication you have, the better tools that you are, and I mean you have, and the better prepared you are, you're ultimately going to succeed in this market. It's just how it is. Those that are lazy to learn are going to be the ones that are typically losing, which is the 90% of people who trade. So the goal is to be the top 10%, and you're not going to get there by just, staying lazy. And I'm not calling any of you lazy because I know most of you are here every single weekend, and that's good. So keep it up, and I appreciate everyone for coming in. I'm going to go ahead and conclude Trade the Open for today. We did reduce Trade the Open to Sundays now. The reason why is because we want to keep them a little more centered on things we want to teach. I appreciate everyone. Everyone, you have a good rest of your night or day, or it's 3:41 for me. But everyone, you have a good day. Okay.